following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. I posted the first few charts into the Tiger Den today, even though it's the commodity hour. I wanted to show the S&P is still attacking the 786 level. We did make a new high in the NASDAQ, and we talked about that yesterday, that it had a very strong probability of doing that because of the three tops that were up there. As a matter of fact, we could still go substantially higher, but we're over a key astro date here on the 12th. We haven't made a new high in some of the other things, but we did in the NASDAQ. But that's that's Alex Rodriguez on steroids that I've mentioned before. Those heavy stocks, those big high-price ones, can move the thing quite a bit, much like it did, during the 2000 market. So, that's not surprising at all. I wanted to start the show today with the gold market because gold is finally broken out above the, above the area of that 1296 level, and we've been up, I think, 11 or 12 days in a row. But I wanted to go through that. And what we had our first question is, and that was yesterday I talked about the NASDAQ potentially breaking out to the upside, and we will see if it's going to do that. The actual number was 3660, and that is correct. That's what we were looking at, 3660. So it's not without the realm of doing it. And remember the days that we had, it started on Wednesday, and it goes to Wednesday, Thursday, and Friday. And of course, Friday we have the full moon coming in, and then we have Mercury retrograde. And Mercury retrograde is very important in astrological terms. This was one of the things that Albert Einstein studied when he was doing his theory of relativity. And about the only thing I know about that is E equal mc squared, and I still don't understand that equation. But I know that it was related to these little lines that are on Mercury is why relativity works the way it does. I was watching, at the level of where these numbers were in relation to the planet Mercury, but it was all done mathematically, and so far above everybody's head. There's quite a few people now that understand E equal mc squared, but years ago nobody understood it. But we'll know about that. But it was based on the planet Mercury. And Mercury is, of course, the closest planet to the Earth, because the Moon is not a planet; it's a satellite. So what we want to do is get right on to the gold market, and I wanted to walk you through here what's happened so far. Now we've broken out above the 61% retracement. However, silver is lacking. And as you can see from this chart, we have both gold and silver on here, and silver is just barely touching the highs that we made back in early January 6 weeks ago, whereas gold has gone another 5% higher. Silver has just barely retraced to that same level and has hardly moved at all. Now what I wanted to do was, we were talking about this yesterday, about the importance of this breakout above the 1297, 1298 level. And I wanted to just to show you what happened last night in this market, because it trades off of these little patterns so nicely. If you're just using a 15-minute chart, using the last couple of days ranges and things like that, you can see that once you get a retracement like this, if you happen to be watching for a buy point, you'll see that the market backed off to that 1286 level and immediately went $1,400 higher, and that completed the ABCD up at that 1,300 level. Now that's why we're talking about that 1,300 level as being, really critical for the breakout. Gold has been up 10 days in a row, higher highs or higher closes for 10 days in a row, and that puts it into the outlier event, mean, it could go 13, it could go 18, it could go 22, which is the all-time record held by silver and sugar. But the odds are that it's going to have a pullback, and it should be a substantial one, once it reaches this level if it doesn't break out. So this is why we're following the gold so closely, to see if it's going to be able to do this pattern the way we want it. And of course, if you look at it on the long-term weekly basis, you'll see that this rally that we're having is actually quite a minor rally, coming off of the 61% retracement from the low in 2008. So we're at a critical level here. We've been up exactly 8 weeks in a row. We had one down week, but it actually was higher that week and closed a little bit lower, but didn't take out the previous week's low. And so we are scheduled at any time now to have a pretty good correction. It could come all the way down to the level of around the 220, around the 220 level. Another about an $80 drop in gold, and then it would be a place where I would think would be able to have a pretty good chance to take a look at this. Now, when you're usually gold traders, when they're trading, they also watch the price of silver. And I wanted to bring up the price of silver, and we can do this by using a 60-minute chart, and you can go back and see when you take a look at this that this silver market has been lagging very, very badly, and we have just we have not even been able to take out the highs we made on the 12th as of yet. That was at that 1240 level. Folks, this is not acting like a market that really wants to go from the upside. We've been up for 2 weeks pretty much straight up in silver, and we've been up more than that in gold, but it's more likely that we're going to have a pullback. The only thing that would change my mind would be a really strong closing move above the $1,300 per ounce level in gold, and a move above 2,100 in the silver level. Then I was 2,100 per ounce in silver, and then I would say that would be the thing that I would be looking at for a potential, for the market to, continue higher. But even then, it's going to be so overbought that, we're just looking at overbought levels. And I have a real difficult time, buying breakouts, because every time I've done that, it's been easier for me to send my check directly into the stock exchange than it is to, or the commodity exchanges, than it is to, actually, take the breakout. Now, if we take a long-term view on silver, we can look at it because we've had a really, really big bear market for the last 3.5 years, since we made our highs back in April of 2011, up around the $49 per ounce level, when we had a lot of open interest and a lot of volume. And now we're down at this level of one half that price, and we have very few people wanting to come in and buy it. That's why our volume and open interest is not keeping up with a bull market scenario. You've got to have new buyers come in. The shorts, can't just keep covering all the time, because when the last short finally does cover, the market's going to really get hit, and that's what you have to be worried about when you're trading a market like this. So it's best to try to plan a place where you can buy it on a pullback, much like last night, just watching it over, say, what was yesterday's low on the 12th, and it pulled back to exactly 786. It was a perfect ABCD correction, and from that level, the market just kept going higher, and that was, that was the bottom line. I'm going to show you this same pattern that we talked about in the gold. I'm going to show you the same pattern that we had in silver overnight, and you'll see that the silver, it came down to the 50% level of this move, but we have not gone above the highs as of yet. And this is telling me the gold has made a ABCD move to the upside, which should have taken silver to the 2070 level, and we did not do that. It would not break out. We could not even take out the highs of February 12th. And we might still, but as of this time, we have not done that. And so that's a sign that this market is struggling a little bit. And even though it's up a little bit from where it was yesterday, it's still struggling. And it's hard to spot these things, but you try to stand out of the way if in fact you don't want to get caught buying something right near the high and then see it collapse. It's better, at least from a pattern recognition perspective, is to buy into a retracement at a higher level, and then you'll be able to quantify your risk much better and be able to see what your risk reward is going to be on the trade that you're doing. That gives you a better chance of being able to see what we're looking at as far as a breakout. I've had a request to do a chart on the euro yen, and right now I would have to, after the break, I'll try to be able to put that up, but I will be able to do the euro and the yen separately, of course. But whether I have the euro yen cross rate on this machine or not, I'm not sure. I'm working off my laptop today because my primary computer decided to go back to intensive care for some more work, and so I'm trying to manipulate my technical stuff through my laptop, which is no easy matter, but it's still pretty good, except that these charts are the size of a baseball playing card, or rather than a 42-inch monitor that I'm usually used to. So this is much easier to do it when I'm on the big computer, which I'm not on right now. But what I can do, I can tell you that the euro is at a very, very critical level, just like we are in the gold market. If you give me a second here, I will bring up the euro chart, and you'll see where we are. We've had a pretty good move to the upside, and then we've had a nice move to the downside. We've stopped at some pretty stiff resistance today here. I still believe that we're looking at a target in the euro, somewhere around the 130 level, sometime during March or April. But we need to get that below the 135.15 level before we get that thing accomplished. But we did stop near the 786 of the high we made last 2 weeks ago. And as long as that euro does not get above the 137 level, I think it's got a chance to move down to the 133 level. But it is held here relatively well. The interesting one, if you have an interest in, since we're talking about the markets for foreign currency, this is the one that has a lot of interest. You want to see a chart that has a great deal of symmetry and everything, and it's the British pound. And I'll put this in here, and you'll be able to see this on the daily, and it is making a very similar top that we made just about. We got to take off for a little break here. We got the Dow down a little bit, the NASDAQ and the S&P are up.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Andy Heck's powerful weekly newsletter, The Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we had a question about the British pound and the euro, and I put the euro in first to show that we had a lot of resistance at this 137 level in the euro, and then also what I did was I put in the chart for the British pound and on a daily, and if you'll notice that British pound chart looks almost exactly like the NASDAQ chart that I posted earlier, where we were looking at these three drives and then the breakout to new high ground. And of course the timing for this comes in within the next day or two for both the British pound and also the NASDAQ. Now what's interesting about the NASDAQ, you can see the three drive pattern pretty easily, but if you go one step farther and draw in the 5-point reverse wave, you'll see that that's also is completing right now, because we did take the high out from back in January. We took that high out by a total of 4 pips. We went 4 pips higher this time than we did in January. So this is going to be interesting, because if we start to reverse from here, this is going to be a huge move to the downside. And the British pound has been up for 3, 4, 5, 6, 7 days in a row, which is very similar to what it was doing in from January 17th into January the 25th. So whether that's going to fulfill a pattern or not, I don't know, but it's definitely you should put it on your watch list if you're looking for something that is fun to trade and has a lot of volatility, which the Forex markets certainly do, and they're open 24 hours a day, 5.5 days a week, and they start trading real early Sunday in New Zealand. So it's this with the holiday coming up on Monday, will have some very, very wild movements, in my opinion, in this market for a long time to come. I want to get back to the gold market because we need to check a couple of things here that look pretty good, and we talked about this yesterday also, and that was that ABX that we've been watching. We had a very nice move to the downside with the big ABCD. Then we had the 382 pullback that occurred down at $18.27. It was a nice little ABCD pattern that occurred, and now, as you can see, with this, we're having we gapped up a little bit today, and we're actually doing pretty good as far as strength now in ABX. And if we can get it above 20, it could really start to move on a much faster basis. In other words, so because this stock used to trade up in the 60s, I believe. I think I can do a weekly on this, and you'll see. In fact, it was probably higher than that. Well, almost 60. It was at 56 at one time. So you can see that the rally back in ABX, just a 382 rally, would take you double in price from where we are now. So whether that's going to have an effect or not, we'll need to wait and see. We need to also look at the gold and silver index, because that's another one that follows along with the gold and silver. And here again, we're seeing the same thing where we have not broken out of the highs from the previous days. We're back at the 786 level, and that's a good thing. But we still have not had a clean breakout of the gold silver index. Like I mentioned before, I really think it's going to take a strong move above 1,300 in the gold per ounce, and a move above $20.70 per ounce in the silver in order to get it to be what we consider a substantial breakout to the upside. And right now we've got silver's actually down on the day now. Gold's still up $2.30. I mean, this is not like a gigantic breakout type day, so that's what you've got to keep in mind when you're watching these things, because being up 10 days in a row in gold like we are puts in such an overbought situation that sure, it can go 12, 13, 18, but it's your risk exposure here is what's difficult. But when you buy gold here, let's say it's trading at $12.97 an ounce, where are you going to put your stop? Are you going to risk $17, $34, $5? I mean, you're going to have to find a place to use it. Whether if you're using pattern recognition, you should get to the point where you'll be able to understand that this should get to the spot where you're not going to have to risk very much. Okay, we've got the Dow is up 10 right now, the S&P is up a couple, and the NASDAQ is up 17.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to talk about Treasury bonds now. We are having a little bit of a rally right now, at least back to the slightly higher on the day compared to where we've been. The market has had a pretty big correction from the high we made up at the 133 level. We came down, held at the 61% retracement after the jobs report, then had a little bit of a rally, and since that time we've sold off, and then with last night's sell-off in the stock market, then the market started to move down. Of course, the market opened lower today, and it started immediately what I think is short covering, because the market went straight up, that's indicative of what happens when shorts start to cover. And we did make a new high in the NASDAQ, but we have not made one yet in the other major indices like the New York Stock Exchange Index or the Russell or the S&P 500. But the NASDAQ is in a world of its own because of the price of some of these very, very high-priced stocks that are in the NASDAQ, which was similar to what we had during in the market in 99 and 2000. That's when the NASDAQ was right near 5,000 with all the stocks that didn't even have sales, let alone earnings. So at least this year it's a little better that these stocks do have earnings as opposed to just having no earnings at all. I've had a request to take a look take a look at Apple, because we mentioned on the show several weeks ago when Apple had the gap down of 10%, that it was going to leave a huge gap, and we were suggesting, because that gap stopped exactly at the 61% retracement, the ending sale of that gap, that told us that we were probably going to get a pretty good bounce here, and we're right at the end of that gap right now. That comes in at around 543. The gap started at around 520, so it's been a pretty big move here. But we're on our we've had lower tops now in Apple since December. We had a lower top right before Christmas. We had another lower top right after the first of the year, and we're also experiencing another lower top in Apple. So as far as I'm concerned, this market is still in a downtrend. It's having a massive rally here of about 10%, mostly because of Carl Icahn and all of the things that he likes to do with stocks, and people jump on board. And we know that Apple is a great company and everything, but we'll let the jury be out to see if it's going to go much higher than this 545 level that brings in the gap. I've had a request to take a look at the junk bond market, and I would certainly like to do that because I worked in the same building as the junk bond king, Mr. Milken, back in the early 70s. And as you can see, boy, this is really amazing, folks. Just give me 1 second. You caught me by surprise because I didn't think you could do this. Well, I know it can do it, but I was really surprised to see that it did it, because we made a really nice Gartley in junk bonds down around the 40 level, 40 cents for a level, and now we've had a pretty substantial rise. In fact, we're not very far away from the highs. It's only about 10 cents away from the highs we made back in January. So even though we had the big breakdown, it snapped back and held back, come back, quite a ways from this. If we look at it on a long-term weekly basis, you'll see that we have been struggling with this level that just a little above the 61% retracement level. Give me 1 second, and I'll put this long-term chart in here, because we did make a 3-drive to a top pattern in this, back about early March of 2013. Then we had the big break, and then we've had the rally back. When I look at a junk bond chart like this, I know what they're doing is they're searching for yield, because people are concerned about getting a return on their money, because the banks, they're only paying 0.5% on the passbook savings. It's the people that are in retirement years that are the ones that are paying the bulk of this hidden tax that they put on us, which means lack of gaining interest. And so someday this is probably going to change. As you can see from this chart, during 2011 and 2012, it had a pretty severe correction in the junk bond market. And believe me, folks, they call them junk bonds. They're really like B and lower, grade B and lower, and maybe it's even C and lower. I'm not even sure. But the reasoning is that they're not able to get financing at the regular price for bonds, or can go to the bank and get it, and so they have high yield bonds. This is what Milken specialized in when he was at the Wharton School of Business, is how to get financing for these undercapitalized small companies, and that's Drexel decided to take him under his wing to do this. And it was certainly, a great thing for Drexel, at least for 8 years. And then when Milken got into trouble with his greed and insider trading, it basically took the whole firm down. I have an interesting story about that, is that Milken actually approached Salomon Brothers to do this before he approached Drexel, because Milken was back in Philadelphia at Wharton, and he approached Salomon Brothers to do this, and Salomon Brothers with Henry Kaufman said there's no way that we're going to attempt to ever go into junk bonds. He said they're called junk bonds for a reason. You can name them high yield if you like, but they're junk bonds under any stretch of the imagination. And so they didn't do it. But the next person that he went to was John Burnham at Drexel Burnham Lambert, and they took it over. It started out as a really small operation there in Beverly Hills, and before long he had several hundred people, promoting junk bonds during the 70s, and that was the time to be in them because interest rates were going crazy. We had T-bill rates at 13%, so how would a company ever get financing just to do its factoring businesses? So they had to have, something like junk bonds, and many of them didn't make it, but many of them did. The firm made their money on the spreads on the bonds. Usually a spread on a bond is about $3, and they had spreads as much as $200 and $300. So that's it. The question someone asked in the den is, why not do muni bonds? And that is, muni, you have to be a municipality in order to do that. A junk bond, you don't have to do that. You just have to be a company to do that. Well, let's just take since we're on the subject of Treasury bonds, let's just take a look at the Muni Bond Index. I think it's MNB, if I'm not mistaken. I don't even know if it's on my computer here. No, it isn't, but I can put it on here in just a second. I'm pretty sure that's what it is. MND. I hope this is it. I might be wrong, and it looks again like I am, so I'm not able to get whatever it is. Someone will alert me to what the symbol is on the Muni Bond, and we'll take a look at it. And we'll, it's MUB. There you go. Give me a second. Thank you, Basil. I appreciate it. And I appreciate you even listening to my show, which is a real honor to me. And give me a second here, and we'll put in MUB and take a look at it. And in fact, these Muni bonds have also come back from the dead, as so to speak, and have had one huge rally. And there we go. Yeah, we're still rallying in the Muni bonds. They're down quite a bit from where they were before, but they're still in a rally. In fact, they're completing a Gartley pattern right now in Muni bonds. Let's just get this. We'll draw this in here, and you'll be able to see it without too much trouble. We're at the 50% level right now in this, and so this might be another reason why we could be running into some financial problems in some of these markets, but we'll see whether this is going to be the case or not. This is really important what happens in these next few days here, folks, because if we come in next week and we're really strong in the stock market, then this model that I've worked with is going to be really, really suspect. So we have to keep in mind that that's a very, very important thing to do. I've been asked to put the long-term chart for the Treasury bonds, the 30-year T-bond in there, and as you can see, it's been in a downtrend since 2012 when we made that big butterfly up at the 154 level. We came down, we stopped exactly at the 61% retracement about 7 weeks ago at that 127. We pointed that out, that made the double bottom, and then it's only had a 5-point rally, which is really quite meager. And we still have a chance to see a 382 retracement in this, which would take us up to the 138 level, which would complete another head and shoulders pattern, and then you would be able to, I would think, write it down, because interest rates are going higher, folks. It's just a question of when. They can play all the games they want with these things, but when push comes to shove, it's the real market that does this stuff, and you have to be able to understand that it's the real market that is doing this, not just the Federal Reserve. So that's what we're keeping an eye on here with the bond market. We did hit the high we hit today was a 61% retracement of the high we made just several days ago, right after the Fed meeting. We've got the Dow up about still going higher, about 20 points. S&P's up about 3, and the Nasdaq is up 18, and we've got gold is up $3, and silver's up a couple cents. So nothing really crazy going on. Copper's down a point, but it's been in a trading range between 327 and 319 for quite some time. Now I want to switch gears here and get over to the grain markets, because we have some exciting things happening in grains. We'll start out with the corn, and I wanted to give me 1 second here to see how I find corn, and there it is right here. We've had a pretty good rally in corn for the past month. It looks like we made a beautiful butterfly bottom in corn, and now we're waiting to see what the pullback in corn will be at this level. We had a nice rally in corn of about almost 50 cents a bushel, which is $2,500, and now we're looking to see, what the pullback is going to be on the downside here in corn. And normally, after you've had a butterfly pattern like this, you're going to come down and make a 61% retracement, and that would take us into the area of around 423, down about 16 cents from where we are right now. So my suggestion would be is to get ready, start looking at this. Next week, we're going to try to have Rich Anderson. He's going to be back from Naples, I'm hoping, by then. The weather stays cold in Minnesota, so he doesn't move from his home in Naples. And so what we'll expect to do is have him on. As far as having Ricky the Rocket LaRusso on, I spoke to the Rocket this morning, and he's under contract with Morgan Stanley, even though he's not working with them in the office anymore. They wanted his expertise, and so they're paying him as an independent contractor, and he told me he's not been this happy in a long time because of the fact that he's able to work at home and he's making more money now, and he's just really enjoying it. The problem is, he said, is what we all face when we work at home is that we work a little too many hours, and that is a drawback to some of the things that we're looking at. So let's keep in mind that we want to be looking to buy this corn if we get down to the 423 level. And we're starting to see, the volatility in the corn markets and stuff, just like we are in some of the other markets. So keep in mind that these markets will be affected one or the other after each other because of the way that things are, unfolding in some of these things that we're trading. I've had a request. This is way off this commodity session, but since this is our show, we get to do what we want, right, folks? So I've had a request to take a look at the VIX index because we are very close to the 786 retracement here in the VIX. We're only about 15 cents away. Just remember, just 8 short days ago, we were up around 2160, and you can see how much we've come down. Volatility, folks, you're seeing these lines here up and down. This is going to be a common occurrence now, up and down. You're not just going to see markets that trend one way or trend the other. They're going to be straight up and straight down. Remember the words of Thomas Jefferson. He said, any country that can give you anything you want has the ability to take everything you have away from you, and the markets are the same way. And any of us that's been around for a very long period of time has experienced, that phenomenon that the markets do have a tendency, to do that. So remember that what goes up does come down. Isaac Newton's law has never been appealed as of yet. It might be at this run, but so far we're still holding in the game here. Let's check our prices here right now. We've got the Dow down. Dow. I can't determine between red and green anymore. The Dow's up 23. The S&P's up 3, and the Nasdaq's up 19. And we'll be back right after the break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and someone has asked me to post the chart for the NASDAQ again that we talked about earlier in the show, so I'm certainly going to try to do that. And you can see here that we are making a new high than we made back on January 21st. Then we came down into the new moon, and now we're going up into the full moon, which is tomorrow. And also at that time we have Mercury retrograde. So if there's going to be any top in here, it should happen sometime between now and Friday, and of course we have a holiday on Monday. Even though the markets will be open for overnight trading on Sunday, it'll be very, very light, most probably, because the rest of the world really looks to New York for their guidance, and we'll see if that's the case. In last week's letter, I focused on the 7 things that I thought why the February low was such an important low, and if you get it, because there are a lot of things related to patterns and the time when, as you can see, from that 2-week move down, and then we had the goal in price and also in time, because the move down in time was the same for the period in January, but the move down during the period in February was 1.618 to the exact penny of what the move down was during the time of the move. So what it's telling you is that the move was expanding to the downside. It stopped right at the 61% retracement of the, the NASDAQ stopped at the 382 retracement of the October low, whereas the S&P and the New York Stock Exchange Index stopped at the 61% retracement. So it's going to be interesting. The old Chinese curse is, may you live in interesting times, is certainly upon us right now. So we'll have to see what's going to happen to us, after this time frame that we're in right now. Now, the next one that I wanted to focus on is the wheat market, because we've had a really strong rally in wheat off of that bottom that we looked at a long time ago. And what I think is happening now is that we've got a chance here for a little bit of a pullback in wheat. And if we can get this, we want to be looking to be a buyer of wheat, just like we are in corn, but that's got to be about 20 cents lower, because this market is still looking a little bit toppy, in my opinion. So we'll have to wait till we get a nice correction down around the 575 level, which is about 17 cents lower in wheat. And believe me, it can move very quickly in wheat, so it's very easy to hold on to that price level, and it'll eventually come to you. The last thing I wanted to talk about here is the crude oil, because we're in the same situation here as we are in the gold market. We are attempting a breakout from the 50% Gartley, and it's going to be a little more difficult, I think, for crude oil to get above this 102 level, just like it will be in gold, to try to get above the $1,300 level. So that's what I'm watching at this particular time. Boy, folks, it's going to be, I won't be here on Friday, but it's going to be pretty wild here these next few days. So try to get your sleep and make sure that you keep your stops in, and don't do anything, really crazy. Live every day in an attitude of gratitude, and may God bless.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You're watching Tiger TV.